This is how I was able to lock in around $3,000, aka 60% on my SPX trade today in less than 10 minutes. As you guys can see here, here's my buy and here's my sell, around 9 minutes. Here's the running P&L. We're up 500, dipped down to red for a quick minute before we continued up. All these stats that you guys are seeing right now are by TradeZella. I'm not sponsored by them. I just use the product. You guys can see here, $3,000, 60% almost, and this is how much we risked. So, what are we looking at over here? When you go out to this chart on TradeZella, you're going to be able to see your exact buy and your exact sell. Now, I'm going to be showing you guys what enticed me to take the trade over here and why I sold at around here. We're going to go on to Trading View to look at the chart, and so I can explain my step-by-step thought process. So hopefully you guys will be able to learn something and, maybe even apply it to your own trading. So first things first, what are we looking at? What is the overall trend here? Obviously, if we go onto the daily chart, you guys can see this is not a pretty chart. This just looks like it wants to keep diving down, right? You go into the 5-minute chart here. This is what I was looking at. I was looking at the current market structure. What are we seeing here? The stock made a high. SPY made a high. It came back down, went for another high. What did it do? It created a lower high. So from here to here, this is a lower high. And we're going to abbreviate that by just putting LH. Then when it dips back down, it tries going back up. What does it do? Forms another lower high, right? What does it do again? Another lower high, another lower high, another lower high, right? And another lower high here. So what is this saying? When you guys see a bunch of lower highs, what are we looking at? What are we seeing? We're seeing an overall downtrend, right? The stock is moving up and then moving down, moving up, moving down, moving up, moving down. But what are you really looking at here? You're seeing that every time it tries to move higher, selling pressure is sending it lower and lower as it's trying to move higher. Does that make sense? So how do we draw that out? We take a trend line. You take your trend line tool, and I'll just, you take your trend line tool and you connect the lower highs. So in my case, this is how I did it. Right? Something similar to this. What are we looking at here? Mine was actually a little higher. I think I had it right there. What are we looking at? You're looking for around 3 touches of that downtrend. And I drew mine a little higher because it was starting to get a little compressed here. 1, 2, 3, 4. There was 4 touches, meaning this trend line is strong, right? So the momentum of the stock is downwards. The stock is staying under this line. What's going to happen when it breaks above that line? It's going to continue up, theoretically, right? So here on the 5-minute chart, why was I looking to play the upside in a bearish trend? One thing I want you guys to note is these big wicks down here, these wicks. What are we seeing here, right? We're seeing every time the price came to this price point around this 373 area, buyers rapidly stepped in and sent it higher, especially over here into close and then the next day's open. You guys could see high amounts of volume. Obviously, that's just with close and mock orders as well, but you guys will see high amounts of volume sending it up. And I didn't mean to say mock orders. So that's one thing I really noticed, is that every time it came down to this 373 area, it held very nicely, right? And obviously you could just put a little trend or a little line there, but obviously you see it doesn't really touch it. It's just like 10 cents away. Relatively, the market makers are protecting this 373 level, right? So that's telling me I will not be interested in playing the downside until we get a candle close under this 373 area. Until then, this is my setup. I'm not trading anything in between. I'm not doing anything until it either breaks to the downside, right? Candle close confirms and continues down, or it breaks this downtrend, and then I'll play the upside. So you guys could see, according to my TradeZella, right when this downtrend broke, my entry was a candle close above. Once the candle closed above this downtrend, this is where I entered my calls, right? This is where I entered my calls. And you guys can see right away, I was up nice. I was up like $500, $600, and then I went red on this little pullback here. Now, most people would have been like, oh, you let a green trade go red. Not necessarily. Whenever I'm looking to enter or exit a play, what am I looking for? I'm looking for a reason to enter, and I'm looking for a reason to exit. Okay? So here, my reasoning to enter was this downtrend break, and that the fact that it was holding this 373 level so strong, telling me that buyers were present. All right? My reason to stay in the trade was that the EMAs were holding. Right? My EMAs, especially when the trend is starting to reverse, you can see it crossed over here. The trend is starting to reverse. It broke the downtrend. It's most likely going to hold these EMAs. My stop loss would have been a close under the EMAs or an invalidation of this downtrend. Right? So I stayed in. I was red for a little bit, less than a minute, and then you guys could see insane profits. What was my reason for selling? I'm going to give you guys a little second to go into the comments and type out why, or even just think to yourself, what was my reasoning? If you guys watched my last video, you guys know why. Okay? So what are you looking at? My whole thing was I was looking at these upper wicks we previously had over here. These upper wicks were very, very strong. These were once strong candles that rejected hard 3 times. So that's telling me, hey, Shinobi, you're up a nice amount. You're up 50% on 0DTs. It's coming into a little resistance area. Nothing wrong with taking profits and then watching it ride, because if it broke out, then I would just look for a pullback to my EMAs for another entry. So I entered on the candle close. I had a reason to enter. I had my stop loss in place and I had my target in place. So what did I do? I just followed the plan. I bought on the candle close and I sold when it came into this low resistance area that we drew out over here. It's that simple. And I'm not saying it's simple, because obviously when you're risking, when there's real money on the line and you're seeing a red number, it's not as simple as just drawing a line and buying in and selling, right? It all comes down to emotions and how you're going to be able to compose yourself, right? So that's one of the main things I really wanted to talk about in today's video, especially in this trade recap, is how to construct a perfect trade. And that's going to be a whole separate video, but today I'm just going to give you guys the little basic. Have a stop loss. Have your entry ready, right? Have a reason to enter. Don't just enter because it looks decent. Have a reason. Why do you want to enter? What is the technical reason? What is the fundamental reason? What are you looking for in this trade? Is the risk to reward worth it? That's what I was looking for here. I had the downtrend break, candle close, stayed in because of my EMAs, and I sold at this resistance. It's really that easy. If you're paper trading, right? All it comes down, once there's real money involved, once you have a good amount of money in place, you're going to be sweating, right? These are 5-minute candles. So this play took around 9 minutes, right? I bought here and I sold somewhere around here, right? In those 9 minutes, those 9 minutes are going to go by very, very slowly, especially if the second this candle starts to print red, you're starting to get, nervous. You're starting to sweat a little. And then when it's not automatically just going to be green, right? So that's one thing is, always want to keep yourself composed in a trade. I got a little confession to make. I always was an emotional trader. I'd be red on the play and I'd be shaking, right? Even though the setup was there, and I'd stop out, and the next thing you know, it just continues. How many of you guys have ever been in a trade? You're in it, you're a little red, the setup's there, you get scared, you hop out, and then next thing you know, it goes the exact way you wanted it to go, right? Everyone's been there. It's the worst. So the way to combat that is size very small. Be fine with losing whatever you put in. If you're comfortable with losing $100, don't throw in $1,000 on a trade with 10% stop loss. Just throw in the $100 and let it grow, right? Trade it like that with zero emotions. But yeah, that's overall the trade recap. I know I rambled on a little bit. Hopefully you guys found some value. You were able to learn a little bit about the structure break, what I was looking for, why I wasn't playing short until I had the candle close. And you guys see, once I had that candle close, you would have had a nice $3. The stock fell $3 from that point. We caught a $2 upside and went $3 to downside. And our entry, our stop loss we had in place, our reasoning, and yeah. Hopefully, I'm going to be trying to make this a daily video for you guys. If you guys enjoyed, make sure to leave a like, comment, and subscribe. Comment anything you guys have questions with or any video ideas. I'll be making them daily from now on. Love you guys. Peace out.